Good morning, guys, and welcome to the show, guys and gals. And listen, I'm really glad to have you guys here. We're going to get the show started now, and what we're going to do is we're going to open up the charts right. Oh, just a second. Open up the chart. My mouse isn't working good. I'm open up the charts right here, and the first thing we're going to take a look at is this headline right here. China's social credit system is coming to the United States soon. Yes, I think this is exactly what's happening. The social programs and stuff is really what they want. It extends control. And also, they have what's called an unfunded liabilities, the United States government, along with the debt that they owe. Tremendous amount of debt. This can all be taken care of. And there's only one way it can be taken care of. And that's by weakening the currency to the point where the currency is actually gets to the point where it's almost valueless. Slowly weakening the currency down so that they can pay off all these unfunded liabilities, so that they can pay everything. They can pay government employees, they can pay everything, and also they can put out new social programs and stuff that extends control. And how it does is because once the government is paying all the people, in other words, supporting them, even if the dollars are worthless, something is better than nothing. And so, if they're being supported by these new social programs, like guaranteed income, then the government has control over that person that's obtaining the guaranteed income. It's about control. And China has total control through their social programs and stuff, and through their system, the way their system works. This control grid is going to be expanded, and this is the direction that we're headed in right now. The people in general, a lot of the people, they want these social programs. And believe me, this is the next step, because these social programs, an extension and a huge expansion of these social programs, also helps to solve the debt problem for the government. Because when they start putting out these voluminous amounts of money, and just once they get to the point where the debt is meaningless anymore, the mountain of debt that they've created, there's only one direction they can go. They cannot shrink this debt anymore. It's too monumental, too large. It's gone past that point now, and the debt is going straight up. It's like a hockey stick curve. It's just going straight up at this point. There's no stopping it. The next step is to actually grow it even faster. And to settle this debt, in dollars it'll become worth less and less and less. Now, in this kind of environment, it's only a matter of time before something snaps, and I'm going to tell you what's going to snap right here. This is going to snap. This is going to break. But that's okay. What they've been doing by suppressing the price of gold and silver, they could continue with this game on gold indefinitely into the future. And the reason why is they have a lot of physical gold on hand. They're not going to run out. But silver's a different animal. Silver is in much more limited supply of above ground inventories that are available for sale. Those are the numbers we need to look at. Not how much silver is in the earth. Forget about how much silver is in the earth. Forget about how much silver is in above ground inventories. That's not a concern. What's a concern is above ground inventories that are available for sale into the open market. That's the concern. Now, we got a little thing coming where the economies of the world right now are going through a little period of a downturn. And this does affect the above ground inventories, because if there's not quite as much industry use or consumption, right, then that puts a little bit of extra silver into the market of above ground inventories available for sale. that could put a little bit more. But you have to understand that it's been awfully cool for a long time with the bar and coin demand. That could really heat up fast once the price starts to heat up. Once people start to see this heating up economy moving in, and things starting to pick up because of the Fed relenting on these programs. But there's a lag effect in here. So we know that they've been in quantitative tightening for a long period of time now. It's been going on and on and on. There's a lag effect between the ending or the ceasing quantitative tightening. There's a lag effect where what they did in the previous months starts to move forward. In other words, they've got momentum going. Almost like if a ship is going on the ocean, it gains momentum. It takes a while for the ship to slow down and stop. An awful lot of ships have run into the dock, smashed the dock all to pieces, because they still have that forward momentum. Well, that's the way with the economy, and that's the way with quantitative tightening. Quantitative tightening now, even though they're ending the program, it still has a certain amount of forward momentum, and that forward momentum is actually slowing down the world's economy. But now what's going to happen when they quit that program now, and they start to actually go back to stimulative measures or accommodative measures? Well, that has a lag effect too. So what we're looking at the real inflationary boom that's coming now that the Fed has changed directions. We're looking at the inflation coming in about another 14 to 16 months from now, the real serious inflation. And that's going to be the point where we have to really watch silver, because silver is the Achilles heel of the financial system. And when that speeding up starts to come and inflation starts to actually come, we could be looking at a vast increase in coin and bar demand. Now, an awful lot of you guys are listening to me and you're saying to themselves, I want silver to explode in price now. I've been waiting for years. Well, I'm sorry to say, but it's starting to look like the setup now for silver and gold to break free is going to be about 14 months out from now. But I'm going to tell you what, that 14 months is going to go by awfully fast. You know? And in the meantime, what we're looking at is a very slow heating of the market. Very slow, with ups and downs, you know, and it's been slowly heating up. But they can't really take it too much down below $15. And the reason why is, and they know this, is they can't go below mining production costs. All in sustainable mining production costs. See, there's different mining production costs. Sometimes you hear, oh, it only costs $7 to get an ounce of silver. Well, perhaps that's the cheapest. That's the mining company that can dig it out of the ground the very cheapest, and that is not completed, and that's not covering all of their overall expenses. When you, that's just a fraction of the cost. That's just not even to get it into a bar or a coin, or not even to get it pure. That's the cost it just costs them to basically get it down to a lump of something that doesn't even hardly resemble silver to you guys. You know what I mean? But when we take in the full costs of mining production, everything, you know, then it's up around, most mines are up around like $14 or something like that, you know, $14.50 or something like that. And it's just barely, the spot price right now is barely over the mining production cost. So they know they can't take it down too much lower than it is right now. And there's an awful lot of upside potential for silver, and we're going to start to see that upside potential once we get to this point where they've basically given up on trying to control the debt, and they let it spiral out of control, and they actually add social programs and everything else to it, and it just basically goes ballistic. Then the dollar starts to actually lose its purchasing power extremely fast, and that's when we start to get our economic recovery. That's when the stock market actually goes to the moon. 30,000 on the stock market is not an impossibility when that day comes. And we're looking out into the future about probably 14 months. So the silver price today is $15.15. You know, and it's doing good today. It's staying nice and strong. Let's take a look at cryptocurrency. Cryptocurrency's nice and strong too. At 41.27, it's almost ready to break out. It gets past 4,200, and we could get a significant rally in cryptocurrencies. Let's take a look here at cryptocurrency market capitalizations this morning, and what we're looking at is 145.2 billion. Bitcoin dominance of 50.1%, and all of the coins are doing well this morning, most of them. We're looking at Litecoin at $60.94. Litecoin is one of the coins that I think is really going to pop. I think it's not impossible within the next year to see $500 Litecoin. And right now they're $60.94. We're looking at XRP at 31 cents, EOS at $4.22, Ethereum at $142.34. Stellar is at 10 cents, 10.8 cents. Binance Coin at $17.33, and Bitcoin Cash at $168.94. That's what we're looking at with the coins today. Now let's move through and take a look at crude oil. Crude oil has been very slowly increasing in price, but I think it's very likely that we could have a little bit. They're having trouble keeping the price up above $60. I think they might have a little bit more trouble keeping it up above $60 because the world economy right now is slowing down, and it's slowing down because of all the quantitative tightening that they've done and that lag effect coming into place. So what we could actually see here is the price of crude oil dropping down a little bit back down into the upper 50s. It would not surprise me at all if we seen crude oil drop down back down to like 57 or whatever. That wouldn't surprise me a bit. Now, let's take a look at the Dow Jones this morning. I think it should be open, and we better refresh the page to get an accurate look at it here. We're looking at 26,089, up 161 points on the day. We're getting really high in this rally. If we step back and take a look at this rally over say, let's try the 2-year. If we step back and take a look at this rally, you know, we see the peaks at 26,616, and we see a second peak at 26,743. Well, we're up over 26,000. We're only, to set a new high, we'd only have to go up like another 800 points or so, and it's set to all-time high, you know, so we're getting up there. You know, this rally has been an awful strong, big rally that we've had. And how much more legs does it have in it? That's the question in my mind. How much more legs does this rally have? Because we're dealing with the effects of this quantitative tightening, and it's coming into its full effect. What they did 6 months ago is starting to come into effect now. And so what they did 4 months ago is 2 months in our future with this quantitative tightening because of this lag effect, you know. So they're going to have to deal with that. But once the whole thing is moved into the future, maybe 6 months or a year from now, then we're going to be dealing with the effects of what they've done by stopping quantitative tightening and going back to more accommodative monetary policy. You see, so there's that lag. We have to figure that lag into the economy. That lag effect. Now, let's take a look at U.S. Treasuries this morning. Now, this is a market we really got to keep our eye on, and because actually Treasuries could very well pop upwards. Yields could rise very quickly in this kind of environment, and we see the yields starting to rise. I talked about this about a week ago when all the yields were falling. I said that we could get a pop upwards in the price of these yields and a sharp increase in the price of these yields very suddenly. And now it looks like it. I'm not going to say it's materializing yet. I'm just going to say that this what we see now is, I'm not going to declare that as the pop in yields, but we do see the yields rising today. What we see here is U.S. 1 month at 242.9, 3 month is at 2.4, the 6 month is at 2.43, the 1 year is at 2.40, the 2 years at 2.29, the 3 years at 2.24, the 5 years at 2.26, the U.S. 7 years at 2.35, and the U.S. 10 years at 2.44, and the U.S. 30 years at 2.85. That's what we see today. And also today, what we see in the dollar index is 97.06 on the U.S. dollar index. The dollar index has fallen today somewhat, but you know the dollar's been staying awful strong, just like the oil price has been staying strong. This is a manipulated market, just like silver. The dollar is manipulated in price. And there's a number of factors that they use to manipulate the dollar. One of them is to try to keep the oil price down. Keep the oil price down, the dollar stays up. Keep the gold price down, dollar stays up. Keep the silver price down, dollar stays up. You know? Here's the thing. There's one other market I didn't name. It's a smaller market, so most people don't say, hey, you know, but keep the Bitcoin price down, dollar stays up, along with all of the others. Bitcoin has become something that's correlated to the dollar now. So it's something that they need to suppress the price of Bitcoin. The question is, can they? You know, I laugh because, let's face it, Bitcoin went to just about $1 trillion market capital not long ago. And it can actually affect the price of the U.S. dollar. If Bitcoin gets too high, the dollar will come down. They do not want the dollar to come down until they're ready for the dollar to come down. I think this is all being orchestrated. You want to look to the orchestrators? Look to the world's central banks. They're orchestrating this fiasco. What's the ultimate end game of the fiasco? Well, in the ultimate end game, you're not going to have cash anymore. Everything's going to be digital. In the ultimate end game, they're going to be able to track every transaction that you make, to the point where you're probably in the ultimate end game, you're probably not even going to have to fill out your own taxes anymore, and not be allowed to fill out your own taxes anymore. They'll have such control that they will actually send you the bill for the taxes, and you'll have to pay it because they've calculated it for you, because they know where you've spent your money. That's the ultimate end game, you know, in all of this. Listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye-bye, guys.